Welcome to the Expansive CEO podcast. I'm your host, Hannah Chapman, founder of Expansive CEO and X Squared Wealth Planning. Buckle in as we explore how to create true prosperity and build a business and a life that expands beyond yourself and makes a dent in the universe. Welcome, everyone, to this episode of the Expansive CEO podcast. I'm your host, Hannah Chapman, and I am here with another Investment Friday with my buddy, Brad Haines, the Chief Investment Officer of Juncture Wealth Strategies. Brad, what's up, man?
Not much, not the markets today. I'm unfortunate to let everybody know, if you haven't checked the market out, it's not up today.
No, and it's Thursday, May 23rd. We're recording. It's like 5:20 p.m. Just to timestamp it. So yeah, today we had one mega cap stock that reported earnings, NVIDIA. They knocked it out of the park. They were up. I'm literally looking at it right now, 9.32%
Yeah.
today.
Yep, they did knock it out of the park. Their revenues increased, their guidance increased, their earnings increased, they increased their dividend, and they came out with a 10-for-1 stock split.
Whoa, I didn't hear about that yet. So
Yep. So
that's incredible.
it's still going to be a high price stock because at this point it'll be over $100 a share, but a little bit easier to swallow than $1,000 per share. So
Yeah. So a stock split, just for anyone who is curious, if it's a 10 for 1, so NVIDIA is doing 10 for 1, that means one share will turn into 10 shares. So right now
correct.
it's trading over $1,000 per share. So when Brad said it'll be $100 per share now, that's exactly what that means. That $1,000 for one share is getting divided by 10. So each share will be just a little over $100.
Yep.
The opposite can also be true. You can do a reverse split, right? Where you go the other direction. Not as common, but
Not generally as common unless your stock falls to a price where, there's some regulatory issues that when you get below $5 or $10 a share, institutional sponsorship or ownership starts to fall off pretty quickly. Your marginability becomes in question. So that's usually the only time you see companies choosing to go in and do the reverse split, to put their share price above those certain metrics. But
interesting. Well, that's not what NVIDIA is doing because their stock price has just continued to climb for the last couple of years, right? So again, they were up almost 9.5% today, but the rest of the market was just not happy.
down.
So what was going on with that? Like I expected that if NVIDIA came out with like great earnings, had a great report, that it would actually like buoy more of the other stocks, but that did not happen.
Well, it did in the morning. So this is a kind of a process. It did in the morning, early in the morning, everything was bid up partially because of NVIDIA's great earnings. But as the day wore on, people became less and less optimistic about the other parts of the market. And so what happened is you saw the gains start to dissipate through the mid-morning, and then it started to go break even for a little while, and then towards the end it started to sell off quite a bit. And so, the S&P 500 itself was down 74.74%, or in the market vernacular, we call it 74 basis points, or 0.75%, however you want to think of it. But the equal weight was down 1.43%.
Mm.
So it's basically the same stocks. It's just how you're dividing them up. And if you're doing equal positions in each of those 500 stocks, then you were on average down about 1.43%. But because of the NVIDIA factor and how large they are compared to the other constituents of the S&P 500, it offset a significant amount of that loss. So it's interesting because I think this is part of, because NVIDIA, running up to NVIDIA's earnings, the financial media really kind of said, well, we're kind of waiting for NVIDIA's earnings to give us the next leg up in this bull market. And the problem with that type of coverage, media coverage, is essentially the stock gets bid up going into earnings. Okay. And so all of the stocks, because NVIDIA is a market leader, so all of the stocks kind of get bid up on the rumor, if you will,
Mm.
on the hope of a better earnings. And then when we actually get the earnings and they're good, then people start to reassess, well, what does this mean for these other companies?
Mm.
Well, it's probably not so positive. And so then they start to sell it off. It's buy the rumor, sell the fact is kind of a little adage in the market where you see that a lot.
Okay, so
Buy what's expected, sell when it comes about.
does that feed into kind of the trope that, the individual investor buys high and sells low?
A little bit, a little bit. It also dovetails into seasonality effects, right? So right now it's the end of May. So typically summers are not a great period for stock market. It just usually it isn't. The volume drops off a lot as people go on vacation. So typically there's a little more volatility in the summer, but typically they're generally not a great period of time. Um, and towards the end of summer, August, September, October, really gets into volatility as we leave summer and go into the fall. And so there's this old truism or old rule of thumb says sell in May and go away. You got all your return for the year, sell in May and go away. So that could be what some people are starting to starting to consider. They're like, well, the S&P 500's up 11 some odd percent this year, 10 to 11% year to date. I might just take a little off the board and maintain higher cash levels going into the summer.
And we talked about this a couple weeks ago, right? That the sell in May and go away actually was because, traders on the New York Stock Exchange and other stock exchanges would literally leave for the summer, right? And go to the Catskills or the Hamptons or wherever it is that they summered. So they weren't there to trade. So there was the literal sell in May and literal go away.
Yeah.
And then they would come back when, everything cooled off in the early fall. So now we don't experience that same type of slowdown, at least in the US, like actual productivity slowdown, or
Yeah,
do
that's
we?
true. Um, a little bit, but not as much as you would think. I mean, I think there are certain periods of time. If you look at December usually has a pretty poor productivity level across the U.S. Um, but summer is a typically high vacation, schools out, families go on vacation. So I wouldn't say a productivity is a I wouldn't say productivity drops. What I would say is um pro uh the overall results do fall a little
Mm.
bit. Just simply because you have less workers doing less work. Because a lot are on vacation. So again, it's nothing that is surprising. It's nothing to be scared of. It happens every summer. Um, this summer, though, we have the election coming up, and with Trump and his election or his various different court cases that are going on, and that's going to affect the markets. We have the Ukraine-Russian war. That's definitely going to affect the markets, particularly as Russia is starting to do hybrid or cyber attacks on NATO countries like Finland, the Baltic states, Poland, and the like. So there are some things going on there that are simmering a little bit. Not even simmering; it's starting to kind of boil a little bit, a low boil, but that could easily heat up. And then you have Israel and Gaza, the situation going on there. And so we do have quite a few different geopolitical risks that really could surface. Um, and then you have China, which is always a big question mark. Is their economic growth going to come back up? It's fallen off recently quite a bit, and um, they are putting together some plans to put some more money to work. But I don't think it's nearly enough as it was last year. Last year they put in probably 3 times as much fiscal stimulus into the economy, and they still have a massive property problem.
Mm.
So again, this summer could be particularly volatile based on those events.
So what would be the typical guidance then for someone who is more of a long-term investor?
Long-term investor, I'll start with one, geopolitical risks you don't know. There's no way you can ascertain the economic or market impact of any of these hotbed conflicts accelerating or widening or broadening out. What I would say is generally when the US goes to war, okay, assuming the worst case scenario, um, the market falls off a little, or market falls off generally in the beginning and then comes back up.
Mm.
Okay. I hate to say it because war is a terrible human crisis. It is a horrible event, but for the economy is not that disastrous, simply because it is more economic growth. It just comes from fiscal deficits as opposed to anywhere else. So you really can't ascertain, if China invades Taiwan, how's that going to impact the US markets? In the short term, it's going to sell off. Those equity markets are going to sell off. However, in the long term, it will probably come back with a vengeance.
Mm.
So it's one of those things you have to, if you're a long-term investor, just kind of ride it out because it's not necessarily going to negatively impact the US economy that much. Now, the aftermath of the war might affect the economy, but that's further out years in the future. So we'd have to keep that in the back of your mind. But it usually sells off real aggressively in the beginning and then comes back pretty quickly. That said, the election. The
Mhm.
election is weird this time because we've had both primary running, not running mates, but um,
Contenders?
candidates, yeah, contenders. We've had both of them as president already. So it's a very unusual situation where the markets kind of know how each of these people are, you know, kind of what policies they're going to pursue. And it's you kind of know. Now, the one thing that is concerning about the election, because generally election years are pretty good for the US stock markets. They're usually pretty good. And the year after the election is pretty decent if the incumbent wins. If the incumbent loses, then generally it's a lower rate of return, albeit the average and median are still positive. So you're
Mhm.
still getting a decent rate of return, just not as high as other years. Um, and that's just simply because they're bringing in new policies they're trying to implement. Now, that said, they're also assuming that if the incumbent loses, the new president coming in has never been president before. So you kind of know what the candidate was like, but you didn't know what the president is like. And I think that would be that uncertainty is less this year because again, we've had President Trump and we've had President Biden. So we kind of know how these two are. The problem and I think that one thing that will keep um, investors and clients and COIs and people of influence awake at night would be is if Biden won and Trump did not concede.
Mm.
And then something happens, whether Trump instigates it or not, something happens where violence is brought about again in the nation's capital. That I think people are very, very concerned about. And I think that would cause again, a short-term disturbance in the market, you would have some sell-off. But again, I don't think because it would impact the economy that much. Um, I'm assuming we get it sorted out within 6 months. I'm assuming it would not impair the economy nearly as much as I think people are concerned about.
So this brings up an interesting point, and I'm going to spring a question on you. So I apologize in advance,
Sure.
but I forgot to send it to you beforehand. Um, that last week, so this was last Friday. It was interesting. A client sent uh, just some remarks that he had heard, and turned out that it was Ray Dalio.
Oh, okay.
Right? So, like, billionaire hedge fund manager, good friend of Tony Robbins, all of that, right? He believes there's a 35 to 40% chance of a civil war in the US because of the election, right? So if Biden wins and Trump doesn't concede, right, to that point that you're making right now, that there's this chance for a civil war. And when you go in and read more of his remarks, it's he concedes that it's likely not like bloodshed, right? Like we're not going back to like the 1860s Civil War, right? Like that's not that kind of civil war, but potentially people ideologies strengthening and people polarizing even more than what they are right now. But even just that kind of inflammatory language, that's what I was surprised about when I heard that. I'm like, what is that serving to even use language like that? Like, what do you think?
Yeah, it's interesting. One, I think that I mean, I haven't read his comments, so I don't. I need to probably read his comments, but I think that that's a little bit high in terms of the probability. Do I think we remain divided or society remains divided based on ideological lines? Um, yeah, yeah, I do. I think social media is, I think the United States has done a very poor job in terms of defending our right to free speech. Um,
Mm.
I think that I think that Russia and China have done a fantastic job at infiltrating US society and causing a lot of these divisions.
Yeah.
Um, I mean, if everybody wants to do research on the Internet Research Agency out of Russia, they literally are a full-time computer science computer group. That's all they do is sow division in Western democracies. That's all their job is.
Hmm.
And similarly in China, they do the same thing. And so um, our capabilities on the cyber front from the Department of Defense, I don't know whether it's because our leaders have been um, not taking it seriously or enough at least. But I think that the divisions you see in the pro-Hamas protesters along across many college campuses this year, I think that highlights part of those divisions and seeing because I can promise you that Russia and China were behind those. They
Yeah.
instigated those.
Well, and that, I mean, that like throws right back to the, was that the 2016 election and the Facebook issues with Cambridge Analytica
Yep. Yep, exactly.
was the company, right? It was the Russian disinformation um scandal, right? That was humongous. And like people didn't know about it, didn't understand how much of the, political discourse in their feed on Facebook, which has I don't know how many users, something around hundreds of
Yeah.
millions, a billion,
Billions, yeah.
billions. You know, the Facebook users being bombarded with this truly misinformation that's meant to, mm, sow discord.
Yeah,
Like,
it's one of the things that I think that I mean on X, formerly known as Twitter, Facebook, Instagram, um all- Snap, Snapchat, um, all of the various social media platforms allow for state-sponsored propagandists to infiltrate, and that's why that's why the Congress has now taken up a bill to ban TikTok, and they passed it and they signed it. So now TikTok has to be sold. ByteDance, which is their parent company, is a Chinese company, and now they have to either shut it down or sell, because they are influencing our youth. Now, people think that that's um, a pretty drastic measure, and it is for the United States. But India, second most populous country in the world, democracy, banned TikTok a while ago.
Mm,
And the reason they did is because of these infiltrations among the youth. So it's one of the things that I think people are getting to the point where they don't know what information is they can trust versus disinformation or misinformation. So I think that's becoming, I think, and it's going to become more of an issue with AI, where AI can generate fake news and
mhm,
they can generate misinformation. And in fact, Elon Musk was speaking today at a conference, and one of the things he talked about was the danger that AI poses in spreading misinformation.
mm.
Um, he commented and said, "You can't teach AI to lie, because if you do, it becomes a very, very dangerous tool." And he's absolutely correct on that front. He's that if you teach AI to lie, it will it will take over the social medias, and almost nothing there will be trustworthy in terms of information.
So what's really interesting about this discussion, and I've been kind of following it as well, selling TikTok having to divest and parent company of ByteDance, right, being a Chinese company, all of that, um, is that when we really saw this at the forefront previously, it was Facebook,
Yep.
which is Meta, right? And they still don't have necessarily like robust protections against this themselves. And so why is that like that's
Yeah,
part of the
no,
conversation. Like why is that okay and we need to ban
it
TikTok?
it is. Facebook has done a much better job simply because of Cambridge Analytica, and they got caught with their hands in the cookie jar a little bit during the 2016 election. So I think they're better, but I think it's almost impossible. It's almost like fraudsters. You're trying to prevent all fraud, but they're so good at getting ahead of you that you keep having to create the tools and the services to counteract them. And so I think Facebook is doing its best, but it is a problem when you have literal state-sponsored actors out there trying to like do this. They are pretty creative and pretty smart individuals creating this misinformation and trying to create division. Um, in fact, there was in the 1980s, there was a KGB agent that um, came over and said Russia has a plan to destroy democracy from the inside, starting with the children of today going to colleges. And sure enough, here we are 45 years later, and they are starting to see fruits of those labors, because now you know who who who's on the right side, we don't know, right? So it becomes a real problem with misinformation, and I think it's going to become bigger and bigger of a problem in the financial markets. Right now we trust earnings reports, we trust filings that we receive, but there's a lot of other information that goes on about companies that historically has been pretty trustworthy, that I think people are going to have to be real suspicious of going forward, because you don't know whether, if I have a big position in a stock, I could put together chat GPT to let it go and start making up some other news announcements that will put the stock up, and because
Mm.
it's not me, it's a chat bot, am I guilty of it? Well, probably, but the law hasn't gotten there yet, right? So I think it's there's always there's always some fraudsters out there trying to use the latest tools to create profit opportunities when there really aren't any.
Mm. So what I take from that, from the advisor side, talking to clients, would be that we don't know. We don't know what the future holds. We can't predict it perfectly. Um, and at the same time, we can be aware of fundamentals of businesses, and we can be really aware of what we're investing in, and we can, utilize, trusted sources, right? Rather than it kind of happens right now already, right? Like
Yep,
news
exactly.
headlines. News headlines will move. One way this was described to me that I think is really powerful is that, um, a really good illustration that people can understand pretty well is that like the news headlines, the political headlines, um, even sometimes the black swan events that happen, right? That take the markets down, like you said, like go down quick but come right back up quickly. Those are like waves in the ocean. They're the waves, right? Sometimes the waves get a little crazy, sometimes they get choppy, sometimes they're, glassy and smooth. The market cycles, the business cycles that are underlying that are like the tides. And so those are more that's what's underlying. That's what we are truly paying attention to, or what are the tides doing? And then the waves are choppy right now, but the tide is still moving in this direction. The business cycle is still in this portion of its overall, life cycle. So
Yeah.
we can trust that more.
Yeah, I would agree. I mean, I think as much as dire as what I was talking about, I think it also opens up massive opportunities for profit from companies. So cybersecurity, data storage,
Mhm.
all the parts of from the infrastructure for AI to the applications to the use of AI within your business model, uh, all of those generations of or not just generations, but different uses of AI or in that innovation wave is massive. And that is going to help really propel companies' profits forward much, much more quickly. And so as dire as I think, can't really trust information, you can from certain sources, and those sources will be able to charge premium prices because it's clean data. And so, there's data fintech companies out there that are specializing in that, in cleaning the data, getting it usable for analysts to review, and they know that it's trustworthy data. So it's as much as whenever there's a risk, there's always the other side of that coin, which is the opportunity for profit and to make money from stocks filling those trying to fill those solutions or to solve those problems. Um, I mean, climate change, I think, is a massive opportunity for profit. I know that sounds weird to say, but I think out there are so many different opportunities from a climate change perspective because that is a massive problem. And we haven't done anything to fix it. And we've done, little things here and there, but solutions for breaking down plastics, solutions for recycling plastics and cleaning plastics out of the oceans and out of the rivers. Um, Ways to, all the way to personalized medicine, where they take your genome if you have an issue and you need a medicine, and they take Hannah's genome and they actually personalize the medication, compound it right there, and give it to you. It's not going to help anyone else, but it will help you with your problem. Okay. I mean, these are all huge opportunities and they will make a massive difference in our lives going forward. And so that's kind of some of the areas that we really focus on in at Juncture, is because these revolutionary innovations are coming down the path in a lot of different areas, and it will affect our entire lives 5, 10, 15, 20 years out.
Yeah, what you're saying y- to me, it like illuminates that when it's a disruption, right? So climate change is a disruption. Cybersecurity threat is a disruption. And so wherever there's a disruption, there is also massive opportunity, like you're saying, for a company or a person, right, to have an idea that will solve the problem. Right. And so that's whenever we have disruption, that's also where the most growth occurs. And so
Exactly.
that's just been the cycle of life
You know,
forever.
it makes me think back just a week or so ago, or maybe 2 weeks ago, we had the Aurora Borealis that had come pretty far south.
Hmm.
I mean, I think in Sedona, Arizona, they had it. So
Yeah.
that's real unusual. Um, and that comes from a solar flare. That comes from a coronal mass ejection from the sun, that the photons come towards, a massive amount of photons comes towards the earth, and it can disrupt our magnetic field in the well, we need someone to solve for that problem, because instead of saying, hey, by the way, your power grid may go out for a couple days, instead of trying to do that, someone can make a solution and upgrade the grid to be able to handle that type of issue, because it happens more often than people want to know.
Right. Well, and I think that perfectly dovetails into the last thing we want to mention, which is the risk webinar that we are doing. So this is coming out on Friday, May 24th. So literally later today, if you're listening to this on Friday, May 24th, that is happening from 2 to 3 p.m. Eastern time. So if you have signed up for it, it'll be great to see you live, have you there to ask your questions, and we will answer questions and talk about the different types of risk. We've actually talked about this on the podcast before. Um, but yeah, what are the actual different subsets of risk that we talk about and we look for as a company, different from what maybe other investment managers look at. And I can say from, my own experience of being in different places that we do evaluate risk differently here at Juncture than other places. Um, and I think that's valuable and I think it's extremely important given everything we're, talking about right now. So that is happening again May 24th, 2 to 3 p.m. Eastern. It is completely free. You can register at the link that will be in the show notes. And if you missed it and you're like, man, I'm listening to this podcast a week later and I didn't get to, sign up for the webinar, send me an email and we will shoot you the replay send you a link to the replay so that you can also hear what we have to say about that. So that will live online somewhere and not sure where yet, maybe YouTube, but we will send you the link if you want to catch it for yourself. So as always, thank you, Brad, for being on with me for Investment Friday. If anyone has any questions, we love to hear from you and to answer those on the podcast. You can get me at Hannah, HANNAH, at expansiveceo.com for specific podcast questions. And Brad, how can people reach you?
You can reach me at bhaines, Bhaines, at juncturewealth.com, or you can call our offices at 480-253-4100.
Thanks, Brad. We will see you again for another Investment Friday soon.
Thank you.
That's it for this episode. Thanks for listening and be sure to like and subscribe. And again, if anything resonated with you from this episode, I would love to hear from you. Email me at Hannah, HANNAH, at expansiveceo.com and tell me about it. And if you're ready for your greatest expansion, you can find ways to work with me at expansiveceo.com and at x2wealthplanning.com. That's X, the numeral 2, wealthplanning.com. So until next time, remember that there is enough You are enough, and your birthright in this lifetime is to be expansive.